Chartbusters. We've got our first guest in the studio today. We have Hi-Tech Pipes who joins us. They've announced their QIP. We have Anish Bansal who joins us, the CEO of the company. Hi Anish, good morning and good to see you in studio. You know, first of all, over the last few years, we have been interacting, and people have been doubting with regard to delivery, how will the segment shape up? But you all seem to have got, all the pieces of the puzzle in place. Let's talk about the QIP. You're looking to raise close to around 600 crores. Sources tell me that there is fairly strong demand. Can you confirm the same? And if you could tell us, what about the, how do you use this money, the 600 crores? What is the utilization?
Yeah, thanks, Nigel. First of all, thanks for inviting on the show. Happy birthday, Mangalam. So it's a better day for the markets.
I wouldn't take credit for that, but go ahead.
So basically, you have seen the journey of Hi-Tech Pipes. We have started, with small, as a small company, and then, we have been building this organization over the last 6-7 years. And where we have come now, we have positioned ourselves, among the leading players in ERW tubes and pipe space. And going forward, with the traction and demand coming from the infrastructure spending and from, private capex, especially in the renewable side.
Yeah.
So we are quite hopeful and optimistic about the, future growth drivers.
Tell us about the 600 crores. How is demand? What are the bankers telling you?
Yes, I'm pretty excited about that. It's a good, we have been started good, and I am very confident that,
Utilization. Who are the subscribers here? Are they domestic mutual funds? Are they hedge funds? Are they institutions?
There'll be a, mix of domestic and foreign funds.
Couple of big names in the Middle East as well?
Looking forward to, yes.
Okay. And what happens to the money, the 600 crores that comes into your books? Because I see almost 15-16 crore of interest payments per quarter. How much does that reduce by, and how much of this money goes into capex?
So essentially this money utilization will be on capex. We are doubling our capacity, and it will take us about 2.5 to 3 years to double our capacity. This will be a mix of greenfield and brownfield plants. It will be additional 1 million tons, and this, with this new capex, we'll be adding, very, very new latest products. And these are innovative products which are not available in the market, and we'll be expanding geographically as well.
Okay, so the debt in your books, I think the last time you joined us at the end of the first quarter numbers, I think you said it was in the vicinity of around 350-400 crores, if I'm not mistaken.
That's correct, yes.
So do you repay some of that debt?
So to start with, yes, but then, on the longer term, the debt will be, there where it is, and but the returns and the margins will improve significantly.
So currently you're 750, you go to around 1 million tons by the end of this year.
Yeah.
And you're saying in the next 3 years or so, you go to around 2 million tons.
That's correct, yes.
So at peak levels, what would your debt number look like?
So it'll be, range bound, where we are operating right now. So, the new capacity will come, the debt will remain where it is, and, the
So if you could break up that 600 crore spend itself for us. 350 crore is the debt on your books. Of this 600 crores, how much are you looking to repay debt immediately? And how much will the capex be for that additional 1 million ton capacity?
So additional capacity of 1 million tons, it will be a total 800 crore capex that will be required. And there'll be an additional, 200 to 300 crores of working capital along with that.
Okay.
So initially, we'll pay off the debt, and then, once the, the spending on infrastructure and, on the assets of the organization, and then, we'll take that debt again.
Okay, another quick question is, getting good names is great, but what about your own holding in the company?
Yeah.
As we see it, it's at around 50%. It's come down a little bit over the last few quarters. What does it come down to, and where are you comfortable? Because as I always say, the promoter is the best analyst of his own company. He would like to have a larger chunk. So tell us, where does it stabilize at?
Absolutely. This 600 crores of QIP will take about, 7% from the promoter holding. But, if I see from the company's perspective, this is very essential right now, so that, our capex growth, we prepone it, and, we are able to take the benefit of this infrastructure.
So 43%?
Yes. Correct.
43%.
So your stake, and thereafter you won't look to dilute it further?
No, I think, from there on, the company will be, self-sustainable basis. We can do a 25% growth year on year post this
So
QIP.
let's talk about this year itself. What you earlier had a 500,000 ton sort of volume target this year, with exports being about 10%, and value-added products as well. So what's the target for this year when it comes to both your volumes, value-added products, and exports?
So if you've seen, in the first 2 quarters, we have done record-breaking sales.
Okay.
And we are almost halfway through, on our guidance for the full year. 5 lakh tons. So we are, comfortable meeting 5 lakh tons. And, first H1 considering monsoon and election pause and everything, despite of those challenges, we have, scaled up the volumes.
So
And
can you beat the 5 lakh tons then? Since you have such a good start, you've done 2.45 lakh already. So can it be more than 5 lakhs given that the second half of the year is operationally stronger and since you have added capacity that's coming on stream?
Yes, I'm hoping so. I'm hoping so, that we beat
So give us a glide path.
targets.
500,000 ton this year. Next year, what should it look like?
6.5, on a conservative side.
Okay.
And then, 8.5 to 9 lakh tons. And then by FY28 will be around 1.3 million tons of sales volume.
All right. And at 2 million tons, what typically is your revenue potential and what does your revenue mix look like at that time? How much comes in from value-added products? What are your margins likely to be? How much comes in from exports?
So have you seen, in last 2-3 years, our share of value-added products has gone up from 25% to about 37-38% now. And by FY27, I believe, the mix will be around 50% value-added and non-value-added will be 50%. And on FY28 numbers, on 1.3 million tons of sales volume, we are looking at a top line of about 8,000 crores.
Okay. And exports would be how much?
So currently, our current focus is on the domestic side because there's a lot of traction in the infrastructure and the renewable side. So our focus is here right now. So exports, there are a lot of challenges in terms of logistics and all of that.
So you better stick to the domestic market.
Yes, current focus is domestic. Yes.
Got it. So we got the volume number. What about the EBITDA per ton? That as well has been moving up. It's around 3,500 rupees per ton as I saw it in the first quarter.
That's correct.
Where does that number head? And also give us a brief insight. You have these solar pipes that you're talking about. Where is demand coming from? Where do you source your raw material from?
So EBITDA per ton is going up, gradually. So this year, I think we'll be around 3,800 to 4,000 rupees per ton.
Okay.
And, with the share of value-added products and, operational efficiencies coming, so, there is enough room to go upwards in coming 2 to 3 years.
Give us
What
an
is the
insight
headroom?
about that solar product
Yes,
as well.
so, this is new product for the Indian market. Now, the solar panels, they rest on solar trackers, which results in immediate, 20% higher, capacity utilization of the solar plant. And we have developed this product called Solar Torque Tube. It's a patented product. And with this, the margins for the company will definitely
How much
definitely
higher
go
is the margins on this product compared to what you do currently?
It's upwards of 5,000 rupees per ton. So, but then with the higher volumes going forward.
So how much of your overall, what's the revenue potential of this product is what we're trying to understand over the next couple of years from your company?
So this market size is quite big, and it's a 40, India is installing about 40 gigawatts per annum, and every megawatt requires about 22 tons of these tubes, and it's a 1 million ton addressable market, and we are expecting a 20-25% share at least in this.
Interesting time. So from around 3,800 rupees per ton.
Yeah.
Give us the guide part. You already gave us the volume glide part. For EBITDA per ton, where does it move?
So it'll be moving up gradually year on year. So 3,800 to 4,200 rupees in FY26 and 4,500 rupees hopefully by.
Just a quick question before we let you go. Your ROE and ROCE are, suppressed at around 9 and 10% itself. And with this 1,100 crore capex that you will be embarking upon over the next few years, that would put a further downward pressure to your ROCE, at least in the very near term. Where do you see it bottom out? And in the sustainable basis, where do you see these numbers?
So ROCE is currently at 14%, and there are 2-3 facilities that got operational very recently, and the generation has started coming in. So going forward in FY28, I believe the ROCE will be upwards of 20%.
Got it. All right. Thanks a lot for coming down, Anish, and giving us all of those details. Track the company over the years. You seem to be getting your act together. We'll track you on those numbers and delivery of
Thank
that.
you.
And also
Thank
your
you.
promoter holding. You say it bottomed
Thank
out
you.
at 43%, so
Thank
we'll
you.
keep an eye
Bye.
out on that.
All right. Well, on that note, though, let's shift focus to our